FGE Nixtant ECA. Mr. Nasseri, thanks so much for joining us this morning. Now that the latest development suggests a tentative ceasefire between Iran and Israel, how much could oil prices fall by? What is, in your view, the fundamental value of oil at present?
If you see de-escalation, which is some sort of a deal, ceasefire or a peace deal or end of this conflict in a rather sustained and certain way, then I think we're going to see the prices to go back below $70 because seasonally we may, and depending on what time it happens, we may see ourselves trading barrels in fall barrels and winter, which is basically when the market is seasonally long. So we certainly can expect the prices to go back to $60 to $70 range. But again, the market has shifted its focus for the time being from fundamentals into geopolitics. When it goes back to fundamentals, it all depends on the state of demand due to the trade barriers and the trade war that also was started by Trump and is now put on hold, as well as the trajectories that OPEC Plus decide in their coming meetings in the month ahead.
The situation worsens again, and if the ceasefire agreement or what appears like an agreement right now does not fall into place as claimed by Iran, and if Iran does escalate either by closing the Strait of Hormuz or by targeting Gulf oil infrastructure, what is the worst case scenario for oil? Are we talking 90 plus then?
Certainly. Definitely when and if we see 20% of the oil supply and 25% of LNG supply to the world being interrupted by closure of the Strait of Hormuz, we're talking about easily $100+, and you could go to $150 or more, depending on how severe. But we're not going to see prices stay below $100 in that scenario. But if we see the situation being a disruption in energy supply by, let's say, attack on energy infrastructure in other GCC countries in the Gulf, then we could obviously see prices less than losing 20 million barrels per day and maybe $90 to $100. But again, that will be an escalation that could lead eventually to losing more supply, and hence, if we see prices jumping to 90 plus, it will be only one step before it goes above $100.
Well, Mr. Nasseri, with such escalations, we always see that there's a concern of Strait of Hormuz getting blocked. Give us some sense that if at all, hypothetically, it gets blocked, what kind of a strategic response do you expect from major Gulf exporters? And is there any route where they can make their exports, any pipeline or any alternative ports?
I think there is no alternative scenario that can supply 20 million barrels per day of what comes out of the Strait of Hormuz right now, and nearly 100 million tons of LNG. Nothing can replace this. There are some spare capacity, pipeline capacity in Saudi that could redirect some of the crude from the ports within the Gulf to Red Sea. UAE also has some spare capacity to redirect some of their crude to Fujairah, which is outside the Strait of Hormuz, but it is nowhere near the capacity which is at risk. And there is almost no alternative for the LNG that goes through the strait. So that is not an option. But what is going to happen, in our opinion, is that the strait will be reopened one way or the other by the US and Europeans Navy, which are present in the region or will be deployed.
Right. And Mr. Nasseri, given the latest developments, do you expect OPEC Plus to rework its planned course of increasing supply by 411,000 barrels per day? This is what they had announced recently. Do you believe any change could be seen on this front?
I do think that OPEC Plus will continue to do what they have been doing perfect for the past few years, to monitor the market and act on fundamentals, meaning that OPEC Plus is not going to change its course of actions due to the geopolitical risk premiums or where the price is heading. But if there is an interruption and disruption in supply from Iran or from other Gulf members, countries in the Gulf, we certainly should expect OPEC Plus to make sure that the market is balanced and hence replace those barrels which are lost. But again, there is an extent to which they can act. No one can easily replace 20 million barrels per day of lost supply.
So how fragile is the current supply balance with 60% of the global output now coming from outside OPEC? Do you think the OPEC bloc has now lost its control and bargaining power?
No, I don't think so. As I mentioned, I think OPEC Plus, with about 5 to 6 million barrels per day of spare capacity right now, still is in driving seat. They have certainly been able to navigate the market very carefully and make sure that the fundamentals of the market are intact. We haven't seen a huge change in direction of inventories build or draw globally, and certainly within the observed areas of OECD inventories and commercial stocks, everything has remained more or less intact and within the norm. Hence, I don't think the surge in production and perhaps in growth production within non-OPEC Plus countries have taken the control away from OPEC Plus. I think they still have the ability to maneuver and add accordingly, or even if need be, remove barrels from the market if the market fundamentals, physical market fundamentals, suggest that the market needs act on it.
All right, Mr. Nasseri, with this, we let you go on that. Thank you so much for taking the time out and speaking with us. Yes, Nifty is off today's highest point. We are almost down 100 odd points from today's highest